Well, Singapore's labour market may have looked less than rosy for the first part of this year, but it did then see a slight uptick in the second half. But despite this, experts say that the employment outlook, whilst it is appearing to be brightening, it's still going to remain somewhat modest going into 2018. Jun Lo explains why.
The labour market continued to contract in 2017. Employment in sectors such as construction suffered, falling for a consecutive 5 quarters. Over 11,000 workers were retrenched in the first 9 months of this year across the economy.
What happened coming into this year was that there was a lot of political influences from the outside. Brexit happened, and then there was the US election, which I guess caused a lot of uncertainties in global markets.
But the labour market did show some signs of recovery in the second half of the year. According to official figures, the unemployment rate for Singaporeans was 3.2% in September, down from 3.3% in June. There was also fewer layoffs in September. Some 3,400 were let go from their jobs, down from 3,640 in the previous 3 months. The Trade and Industry Ministry had already upgraded its economic outlook. Now, the authorities had in November this year made an upward revision to its full-year growth forecast. That's from 2 to 3% to a range of 3 to 3.5%. But despite the better-than-expected report card, analysts warn that this may not necessarily translate to a huge uptake in employment figures next year. Observers say businesses may not be fully confident of the growth of their industries for the long term. They agree that the improvement in outlook is mainly in sectors like manufacturing and has not yet been very broad-based. Government initiatives like Smart Nation and automation are also still at an early stage, so hiring in these newer areas may not be in large numbers.
There's still not much, confidence in these systems, so we don't know whether it's actually going to be sustainable. Until we get that confidence, then I think scalability will happen, to which then we will be hiring jobs that we don't even have right now.
If you do that too prematurely, companies end up having risk in terms of hiring headcount that they perhaps could not sustain. So usually the lag time typically that we see in the market between revision and GDP is a 2-quarter sort of impact before the labour market adjusts to it.
But it is not all gloom for workers, as experts believe the overall outlook for the job market is brightening. Labour demand is expected to rise, but at a gradual pace in the short term. Observers say people could also turn to contract work or contingent work for more opportunities moving forward.
We certainly do see an upward swing in contingent workers, and I think that's also a societal push as well. You know, I think with millennials coming into the workforce, they enjoy that flexibility and mobility of the workforce.
As companies start to be affected by digital transformation, they're forced to relook at how much of their current workforce that they can retrain and upskill, how much they need to go to market to hire. Having a contingent workforce is perhaps taking a more responsible approach to their talent.
But ultimately, experts say the right skill set is necessary to remain employable in the future economy.
The issue we have right now is that the skills are quite specific. We want to actually be a smart city, and so cybersecurity is, for example, a new job that we're looking at. But we have currently at least 1,000 professionals short of what we need. So again, there's a bit of a mismatch between what we are looking for and basically what is out there. It's really understanding what is impacting and then really acquiring the knowledge to see whether you can actually ready yourself.
The Manpower Ministry encourages workers to attend Skills Future courses as a means to upskill themselves.
Well, in the end, the secret may be in trying to make work seem like play. Don and John?